What's up, everybody? Welcome back to Gray Rabbit Finance. I'm Tyler, your host, and today we're diving into an essential lesson, mastering Japanese candlestick patterns. As traders, understanding these essential patterns is key to unlocking success in the markets. Plus, I'll walk you through Munehisa Honma's secret philosophies for trading. Are you ready to level up your trading game? Let's hop in. So it's important to understand the candlestick first. So each candlestick represents a specific time period on the chart. For example, 1 day, 4 hours, 1 hour, 1 month. The rectangular body of the candle represents the opening and closing prices during that time period. The colors of the candlestick. For a bearish candle, the sellers are in control, usually represented by a red candle where the closing price is lower than the opening price. Bullish, buyers in control, typically represented by a green or white candle where the closing price is higher than the opening price. The upper wick or shadow and the lower wick or shadow are the thin lines above and below the body, and they represent the highest and lowest prices reached during the time period. The candlestick body is the wider part of the candlestick and represents the range between the opening and closing prices. Now guys, I'm going to show a quick animation so you can see how the candlesticks are formed in action. Okay, we're going to start with an animation of a bearish candle. So now price has opened up to form the upper wick, and now the body of the candle's coming down. It forms the lower wick and then closes slightly above. Here's the bullish candle. Now price opens, goes to the lower wick, the body goes up, hits the upper wick, and then it comes down and closes. Okay guys, now let's take a look at the Sakata Goho price action. The Sakata Goho is a set of 5 basic price action patterns discovered by Munehisa Honma while studying candlestick price action in the Japanese rice markets. Understanding these patterns will give traders a strong foundation for reading price movements, helping them time their entries and exits better. Named after Honma's hometown, these patterns fall into 2 main groups: trend reversal patterns and trend continuation patterns. Trend reversal patterns include 3 mountains, 3 river stars, and 3 gaps, making them easy to remember because they all have 3 in their names. Now let's take a look at the 3 mountains pattern. The triple top pattern, also known as 3 mountains or sanzan in Japanese candlestick analysis, resembles the Western head and shoulders formation. It suggests that price moves in a 3-step structure. This pattern is well known in both Japanese and Western techniques. It signals a potential trend reversal when price bounces off a resistance level 3 times. Sometimes called the 3 Buddha pattern, it's inspired by the tradition of placing 2 smaller Buddha figures besides a larger one. This pattern is important to both Eastern and Western analysts. Interestingly, the Japanese version, whether called 3 Buddha or 3 mountains, was recognized nearly a century before its Western counterpart, the head and shoulders pattern. This shows that both Eastern and Western analysts saw it as a strong reversal signal. Now we're going to take a look on a real chart to see how we can identify the 3 mountains pattern. And guys, I just want to take a second to thank you all for liking and subscribing. It really helps me and my family, so it's much appreciated and much love. Now let's keep going. Okay everybody, we are here on the weekly chart for the S&P 500. And so I'm going to give you a few seconds just to see if you can notice where the 3 mountains pattern is, also known as head and shoulders to Western technical analysts. Okay guys, now I'm going to turn my drawings on. As you can see, here is the 3 mountains pattern, and I have the image of it here, but one trick that I want to show you guys is that we need to use the Chico span. So using the Chico span, we can easily identify the first mountain, the middle mountain, and the last mountain. These are also called shoulders. So this is the first shoulder, the second shoulder, and this is the head. So this is head and shoulders, or 3 mountains. And so you guys can see it's pretty simple. And this would be for a bearish reversal. So you can see once we break this support level, price went down quite aggressively because this is known to everyone who trades as a very strong reversal pattern. Okay, now we're going to look on the same chart for a bullish 3 mountains pattern. So take a look and see if you can identify it. Okay, now I'm going to turn my drawings on. So here we go, guys. Another 3 mountains pattern. This one with the middle mountain not quite as protruded as the other, but still essentially the head and 2 shoulders. And then this would be called the neckline, if you're talking about head and shoulders. And once we close price above this line, that confirms the breakout of this pattern. And as you can see, once it closed, we had a strong trend in the opposite direction. So guys, just remember, this formed a triple bottom. And when we see triple bottoms, that's a strong sign of reversal. So remember the story that the candles are telling you, and just remember this simple pattern because you're going to see it quite often in the charts. Okay guys, now we're going to dive into the 3 river stars pattern. Among the candlestick patterns, the 3 river stars group stands out. It includes the 3 river morning star and evening star, the southern cross, and the 3 river bottom. This group's name comes from a historical battle in Japan. Each pattern signals a trend change. For the bearish variant, the 3 river evening star appears after an uptrend. First, there's a long bullish candle, followed by a small-bodied candle, or doji/spinning top. Then a gap appears above the first candle, followed by a long bearish candle. Confirmation comes with another bearish candle. Conversely, the bullish 3 river morning star forms after a downtrend. It starts with a long bearish candle, followed by a small-bodied candle, also known as a doji or a spinning top. Then a gap appears below the first candle, followed by a long bullish candle. Confirmation is seen with another bullish candle with a higher high and lows. Now guys, don't be overwhelmed by this, but as someone who's new to trading or even an experienced trader, doji and spinning top candles are some of the most important candles that we can be identifying in the charts. This is like a siren going off. These candles show us the first signal. This is the very first signal that the trend could be reversing. So remember, if you need to know any candlestick, it's a doji and a spinning top. Make sure you remember those. Now guys, we're going to take a look on a real chart to see how to identify these patterns. Okay guys, here we are on the S&P 500 on the weekly. And now we're going to confirm a 3 rivers morning star pattern. So take a look real quick and tell me if you can see one. And now I'm going to, feel free to pause if you need to. Now I'm going to turn my drawings back on. Okay, so guys, here it is, quite simple. We had the bearish candle here. We had this doji spinning top here. And then we had a bullish candle reversal. And once this candle closed, this confirmed the morning star pattern. So guys, it's really simple. Like I mentioned before, we really need to pay attention to any candle that's a doji or a spinning top, because this is a siren. We have to be aware because this is a very strong signal the market may be reversing. So keep that in mind. Okay guys, now we're going to look for a 3 rivers evening star pattern, and this will be for a bearish reversal. So feel free to pause if you'd like to take longer looking for it, but now I'm going to turn my drawings back on. And you can see that we found one here. So this is the original pattern, a bullish candle, and then either a spinning top or doji, and then a bearish reversal candle. And once this bearish reversal candle closes, this confirms the pattern, and we are going to have a bearish reversal. Now guys, like I mentioned, always pay attention to the spinning top and doji. This is very crucial to finding reversals in the market. Alright, now let's continue with the 3 gaps pattern. Within the fundamental Sakata Goho patterns are 2 trend continuation patterns. Unlike the 3 gaps pattern, the 3 parallel lines, Sanpei, show that the current trend is likely to keep going. This pattern includes 3 consecutive red or green candles that stay close together without any gaps. It indicates a steady movement in one direction. Each candle starts within the range of the previous candle's real body, suggesting the trend will continue. In a bullish market, it's called 3 soldiers, and in a bearish market, it's called 3 crows. These parallel patterns are more common than the 3 gap patterns. While they're usually seen as signs that the trend will continue, finding them early in a trend shows strong momentum, but if they appear later in a trend, it might mean that the market's momentum is weakening, so traders need to adjust their strategies accordingly. Now guys, we're going to take a look at 3 white soldiers and the 3 red crows pattern on a real chart. Okay guys, we're going to start with 3 red crows bearish trend continuation pattern. So take a look on this chart and see if you can spot it. Feel free to pause. And now I'm going to turn my drawings back on. Boom, there it is. So you can see guys, we had 3 very strong bearish candles like the original pattern here. And basically what this is just showing us is that the market has a lot of momentum in that direction, and the trend is most likely to continue. So look, we had 3 candles, we had a very shallow pullback here, and then a nice continuation on the trend down. So guys, it's really simple, there's nothing more to it than that. Okay guys, now we're going to look for the 3 white soldiers trend continuation pattern. So feel free to pause if you want to look yourself and see if you can find it. And now I'm going to turn my drawings back on. Okay guys, and there you can see that once we broke resistance, we had a strong candle here, here, and here. 3 white soldiers in a row, and then this trend continued all the way up. So this was a very strong trend continuation pattern. So guys, this is very simple, very straightforward. Just look for 3 white candles and you're going to find the trend continuation pattern, especially once a resistance level has been broken. The Sampo pattern appears when the market takes a short break from its main direction. Showing 2 versions, the rising Sampo is good for buyers, and the falling Sampo is not so good for buyers. This pattern pops up when the market pauses from moving straight up or down, making traders rethink their positions for a while. It's about knowing when to enter or exit the market and when to hold back. This method focuses on 3 main actions: buying, selling, or waiting. It comes from Munehisa Honma's way of timing the market. Back in the 18th century, he dealt with challenges like bad weather and natural disasters in Japan's rice markets, showing how this method can handle the ups and downs of the market. Now guys, it's very important to note that to confirm the N wave, we always need to wait for the bearish candle to close below the support, and we need to wait for the bullish candle to close above the resistance. This confirms the trend continuation. Now let's take a look on a real chart to find these patterns. Okay guys, now we're going to look for the following 3 bearish trend continuation pattern. So take a moment to pause if you want to look for it yourself, and if not, I'm going to turn my drawings on. Okay guys, and here it is right here. So take a look, we had the original pattern with a retracement here with 3 bullish candles. We had a nice retracement here with this double top, and then we had a nice N wave continuation down with a strong trend continuation. So guys, it's really that simple. We just have to remember that this candle here has to close below the support level. And so we always draw the support levels to the wick. So you can see that here, we've had it drawn to this wick here, and then once this candle closed below, that confirmed the trend down in this direction. And so it's really that simple, guys. And one thing to note too is that once we get this structure on the price action, this is how we confirm N waves. So here's an N wave down, here's an N wave, and so it's always confirmed once the candle closes below the support level. Okay guys, now we're going to find the rising 3 pattern, and take a moment to pause if you want. If not, I'm going to turn the drawings back on, and here we go. So look guys, the original pattern, we had 3 candles in the bearish direction here, and then we had a bullish candle close above the resistance level, and that confirmed this N wave, and that confirmed the trend continuation. So guys, remember, the candle needs to close above the resistance to confirm the N wave. And once we get that, we confirm the trend continuation. And look, we've had a nice continuation ever since then, and a really strong trend in the bullish direction. So just remember these patterns. This is the key to finding N waves, which is one of the main 3 waves of the Ichimoku system. If you haven't seen my video on Introduction to Ichimoku series and how to trade Ichimoku, I highly recommend it, and I'm going to put it at the end of this video. So watch that, and that's going to show you the 3 main waves you need to know: the I wave, the V wave, and the N wave. So get into that if you're new to Ichimoku. Okay guys, now let's take a look at Munehisa secret trading philosophies. In Munehisa book Sokyo Uhuroku, he offers us his major philosophies for trading. The first one is, do not trade based on your intuition. Now guys, I think you all know that we need to have a strategy that has been back tested on the instrument that we're trading in place. If we don't have a strategy that we execute each time the same way, then we're really going to be hurting ourselves and hurting our potential profits because we're not going to be consistent. So keep that in mind. Number 2, do not rush into a trade. Now guys, when I'm trading, I have a nice flow chart that I've made that makes sure that I've checked all the proper time frames according to my strategy, and make sure that I have all the right indications checked off on my list before I execute a trade. And so I like to go through this flow chart that I've made, which I'm going to be offering to you guys for free on my website. So if you go to sign up on my website, which I'm going to put the link below, you can receive my free flow chart for my trading strategy. But either way, I always check this flow chart to make sure I've checked off everything for my strategy. And then I take a deep breath and just wait 30 seconds before I execute a trade on TradingView. So guys, that's what I like to do. Now, number 3, do not trade just because you're bored and have free time. Now, in the past, I've been guilty of this mistake because I love trading, as you do too, probably. And so it's the key is having restraint, because guys, the markets are not always running. The markets are not always trending. So we need to make sure that we're trading during the optimal time periods. And during those time periods where the markets are not running, we need to be doing something else. So we need to have another hobby, another job, something else to do to just take us away from the markets. And we can still view the charts. We can still look at the charts every day, but we don't need to be trading every single day, because that's a lot of times how traders give most of their winnings back to the market. So keep that in mind. Now, the next philosophy is, do not trade if you're too tired. Guys, that's pretty self-explanatory. They say master chess players, when they play a game of chess, burn over 2,000 calories from using their brain, just as much as an athlete would burn, in a sporting event. So guys, remember, we're using our brains, we're using our thought power, and we're burning a lot of energy when we're trading the markets. So we need to make sure that we have our system fully energized and that we're feeling like we're ready to go. I think that's pretty self-explanatory. And now, last but not least, do not exit a winning trade too early. Now guys, how many times have you taken a trade and you've gotten you've gotten into the green, you're making profits, and then you've exited too early? This is one of the struggles that many people have as they're beginning trading. And so I've found a few ways around this. And so I want you guys to watch my strategy videos, because I've found some mechanical ways to make sure that we don't exit a trade too early based on my strategy. So I want you guys to go and look at those videos. Now guys, I want to leave you just with some key summary points of today's lesson. Anyone new to trading, you guys need to remember what doji candles are and spinning tops. These are going to be some of the most important candlesticks to remember. But when I first started trading, I thought, I got to remember thousands of candlestick patterns. That's not true. Remember guys, a story starts with a beginning, a middle, and an end. And so these candlestick patterns are all in groups of 3. So if we learn to start viewing the candles in groups of 3, it's going to be much easier because we're going to understand the story that they're trying to tell us. So what I want you guys to remember are the Sakata Goho patterns. These are essential, and with these stem all the rest of the patterns of price action. So if you know these 5 patterns, you know all the rest of the patterns, and you understand the story of 3 candlesticks. Any 3 candlesticks you look at, you're going to understand the story, and you're going to be able to predict and use that information for better entry timing, better exit timing, and just overall better trading. So keep that in mind, guys. And remember Munehisa philosophies, because all of this still works today. And he's one of the most successful traders of the past few centuries. And like mentioned in the previous video, he amassed a fortune of over 10 billion US dollars back in the 18th century. So if anyone knows what to do with trading, it's Munehisa, and keep that in mind. And I want to know, what are some of your ways that you guys keep from exiting a trade too early? What are some of your secret philosophies for trading? Please leave a comment below. I would love to hear your philosophies. And thanks again to everyone for liking and subscribing. I really appreciate you. It helps me and my family tremendously. And I hope you enjoyed today's lesson. And until next time, guys, peace.